All right, ladies and gentlemen, I hope you're having a wonderful day. It has been crazy so far the last 2 days, and we've been on stream. We just got off a 9-hour stream after the Apple earnings and AMD. I want to talk about what happened today in the markets, just kind of recapping so far and kind of looking ahead. But we have the watch list tonight at 7 p.m. It might be pushed back to 8 p.m. because I'm putting this video, but I haven't done these recaps. I want to make sure we're not losing any of you guys who can't be on the stream, but I want to talk about this, what we're going for this week, but there is now important events. There's stuff that could affect the market. Now, there is one thing specifically that I'm going to share with you, and it's coming up. It's happening tomorrow. You probably know what it is, but now with earnings wrapping up, we're getting some of these bigger names out of the way, and there's still a lot more we have to see. It's setting up stuff now, kind of historical trends with the market and everything, so that's where I'm tuning in for you guys. I want to recap, and I'm at the same time setting things in gear for the transition from out of earnings, and now that's what we're looking at to do, stock market analysis, whatever you want to call it, but see now where we're going. But as a day trader, long-term investor, anything, the real plan here is looking forward and forecasting now what did these numbers from all these earnings give us, and now what can we factor for growth, and what do we expect, and how it's going to move. And now there is stuff coming historically and seasonally, and like I said, there is a lot of short-term stuff that's kind of developing right now, but the market has really been fixated on earnings. So we are going to talk about that. Make sure you guys like this video if you like this type of content, so you'll see it. Make sure YouTube keeps you updated with everything. But also, I don't know. I played. I made a big play on Apple today, guys. Before earnings, we did it live. So if you guys got to see it, I'm either going to lose 30 grand or make 30 grand or maybe more. Who knows? We'll see. But it was pretty exciting. But make sure you're on stream. We're going to go over that pre-market, and you're going to watch me close out of that because, again, being earnings, I'm probably going to make some moves right off the bat. So watch out for the watch list tonight. We're going to go over that. And, too, if you guys can't make it, we have the stream alerts, the second link in the description here. And I feel like I'm talking too much, but I need people on that. You guys, honestly, go watch the video. We had an awesome call with Big Mike today. I want to do these meetups, so go to the stream alerts page, watch the video, and then come talk to me, okay? That's all. Don't do anything. Watch the video, and then come talk to me. Give me some feedback. I just want to hear from you. But let's get into this. The first main big thing is going to be the Federal Reserve. Now, you guys could go to federalreserve.gov, and it'll bring you here, and you go to monetary policy and then meeting calendars and information. It'll take you here, and you see the FOMC meeting. So it started today, April 30th, and now it's going to come into tomorrow. They're going to have the press conference. You're going to, remember, we already got the minutes a few weeks ago if you've been on stream, and then they're going to release everything, and that can have an effect on the market. So that's the first of these big three things. So now there's a few things I'm kind of clarifying. There's these three things. The Fed is one of them. This is stuff that is going to have an effect after earnings right now, and again, specifically tomorrow, but then also now until August. So you guys need to think August now because it's these blocks, it's quarters, whatever you want to call it, but that's where the other reasons, and even now historical trends, economies, everything, that's kind of where we're going to start gauging, okay, 2019 recession, here's the expectations, because again, that final quarter is where all these companies have now guided up to, if they did guide up. So we don't know their guidance for after that, even though some companies like Netflix have already reported, their full year guidance. So we'll see how that changes. But that is the first event, and that's the Fed. So you guys could get there, and that's going to have an effect tomorrow. And now why I'm bringing this up, it could have a big effect tomorrow. Again, some people are worried. I know Apple reported after hours here, it's up about 3%. If it drops or this and that, I think any of the bigger moves after these earnings, we're going to get moves after the Fed tomorrow. I think some people will be hesitant. We will see, though. I think it really is going to depend pre-market, but we are at all-time highs. This is the highest we have been. It breaks over that 293 high. So we are all at all-time highs. So now the next question is, what does the Fed do? So now as a refresher, remember, last Fed meeting, nothing happened through February. If we go back here, this March one, nothing happened. This January one was the pivot by Mr. Powell. But I guess even March kind of did shock some people, though, because he was a little bit too bearish. He was a little too bearish, but I think, it was the December one where I think it was one of these, though. But the latest, pretty much coming off the latest Fed meeting, he was dovish, and although we want dovish, meaning, and for the people who aren't familiar, Dovish means the Fed is going to be accommodative, easy on investors and just the economic environment, low rates, right? Or dovish, or they're going to not try to upset the market. Think a gentle dove. The reverse is hawkish, which is not accommodative, higher rates, and, hawk, pretty aggressive there. But so the thing was, he was very hawkish. That's what brought the markets down from October coming into January. But then the next level, he switched and became very dovish. But then it was either the last meeting or the one before that. I think the 2 meetings before this one, he got dovish, but now he was too dovish. So that is the point for tomorrow's meeting, is what I'm saying, is that last time he was too dovish. The markets wanted a dove, but he was so dovish it made people panicked. It's kind of like you walk into the room and someone's like, "Hi, how are you? What can I do for you?" It's like they're being suspiciously nice, and that's how the market took it. It responded a little better at the last meeting, but now we need to see if he, market's back at all-time highs. Is he going to switch his tone? That's one thing. I doubt he will. But if it's too hawkish or too dovish and what the other people say, that's going to have another effect on the market. The next thing now to look for the rest of 2019 coming in, and this is stuff that's recent, is going to be the Shanghai Composite in China. Now, you could look at other stocks like Alibaba and all that, but pretty much since January, if you guys remember, I made a video. They've been pumping credit in. This is, like I said, it was like I have a video on this channel called "It's China's Doing Their QE." That's essentially what this was, but the issue is it didn't help them really bounce that much. It was the biggest historical injection, but you put it in perspective, they're still kind of just right above their lows from the crash. So China's been signaling all last week, and now they said that the Politburo, he said they're letting the pressure off of easing. They don't want to create a hard crash and cause a double dip in the decline, but they're going to ease off of there. And China's not looking good. And then now historically, August, that summer season, that's when their numbers are going to change. Today, remember, 2 weeks ago, we were getting great PMI numbers. I made a recap video from China. It brought a lot of the China stocks up. Remember, I think that was when we played Baidu. If you guys have been following along, and that's why, you stay tuned. We're keeping you updated, doing the homework for you. Shout out to chat. But they popped up the Asian stocks, and that was the last time China had good PMI numbers. But they had some other manufacturing ones today, and those were bad. And it didn't, and the market was kind of a little shocked by it. We saw some pressure in the Chinese stocks. But again, this is going to take stuff to develop. But then now there's also the issue with China and oil and Iran, and then not to mention the trade war and those developments. So that also stuff could affect it. But even China's economy as a whole could start to slow down by August, and we're going to see here, because that's seasonally when you see that stuff happen. So stay in tune for that. But then the next one is still related to China, and it brings up the final one I wanted to talk about, oil. So China, and you could look at ASHR. This is the A-shares China. Again, there's many different Chinese indexes. But here's oil, and I guess maybe if I overlay it with USO, you could kind of see they move a little bit hand in hand. They should honestly move inverse. Exactly. There's an inverse at some times. So I'm waiting for one to do the other, where China's going to stay or oil. But I would really expect, honestly, I think oil might rip up and China will go down. And here's the reason why. This is the final thing with oil, and to watch for 2019 and how it's going to affect the stock market, where things are going to go, is what's happening with oil. There's everything from the Saudis to Russia, but now Iran. There was the Iran waivers, and I made a video talking about that a little bit. But what happened, the top 6 countries dealing with Iran, they had waivers to go find new oil producers. Otherwise, U.S. is going to sanction them. China, Japan, they asked for extensions. U.S. said no. So they have a few weeks. If they don't get that, it could start issues with China, but overall, it could make some big moves in the oil industry. And again, we're watching the buyout with CVX, and then APC, what's his name, said something on it. Warren Buffett pledged like $10 billion or something. Then you got BTI. I don't know. This is tobacco. That's Phil. I'm tripping. See, I'm all over the place. Crazy news today. But I was thinking, what's it called? The one with the BP. Yeah. But that's pretty much it, though. Watch all 3 of those. Watch for disturbances, because they all are connected. And again, because oil could affect the S&P, but mainly oil could affect the dollar. It's a traded good, and how goods get traded. This is why all trade is important. So oil is going to be important, how it could affect the dollar in China, and China could affect demand on oil, and again, interest rates and the economy, and then the Fed could pressure emerging markets. So these are the top three things to watch for, and I'm saying it's a pivotal moment here because we're wrapping up the Q1 earnings, Q2 for some companies, and now we're starting to edge towards the second half. So this is kind of staying up to date with what to look for, and the best part is, if I'm wrong on all this and none of these things happen, we're able to see, okay, well, that is a theory. We're going to be able to adapt and learn from there and kind of really see what's going on. So I'm going to leave it there, you guys. Drop a like, subscribe if you're new. Drop any questions. If I missed anything you want to add to the discussion, you guys are awesome. I already, we see the chat, man. Y'all killing it. So please add your comments, post some stuff. I'm going to see you on stream tonight or tomorrow. I meant to say I'll see you on the watch list tonight. Let's go.